Good day, AVZ Traders, and welcome to broadcast number 14. Now, yesterday, 1st of September, was US Labor Day, and as can be expected, not often, the market didn't do much for me. We didn't have much trading taking place, which is okay. Big guns were not in the market. But I'm always in the market. I got a full working day that I go through. And what I did in that time was work through my own trading journal. Now, I thought, hey, hang on a second. Let me show the guys how I keep my journals, how I maintain my journal. Now, my trading journal is a journal both of trades that I have taken and I just make my annotations on them. It is also a record, a review of charts. I do limited back testing, really. I just go back and look at probably a week, 2, 3 weeks at most, because my patterns that I'm teaching you guys, the best price action patterns in the AVZ recur frequently enough, within a week or two on any chart. So there really is no need to stretch back into months. So my record, actual trades taken, or when I do my weekly reviews more often, I find, where the strategies have set up, and I say, oh, I took that, I didn't take that. That I need to keep a record of because that was pristine. So when it recurs again, as they often do, instantly I have trained my neurological system, my processing, the way I process the way my brain processes charts. That's one of the key purposes of the way I keep my trading journals. The more I look at my charts, the more I reconstruct my neurological constructs. In other words, I change the structure of the neurons of the mind, of my brain, and my eyes so that when things appear in front of me in real time, I know exactly what I am trading and what has a 75% probability of succeeding. So, let's just crack into it. You using PowerPoint. I use PowerPoint to journal trades and to optimize. And for you guys, is to optimize the Q&A process. Okay. I guess I do ask myself a lot of questions. That's why I do a lot of charts, right? Trading and reviewing your trades, guys, against our strategies and journaling them is one of the keys to becoming a consistently profitable AVZ trader. That's number one. Trading, you have to actually trade the way that I coach you to trade, and then review your trades against the strategies and journal them. You also need to review charts. And I just say at the end of your week for strategy setups, just do a limited back test. Okay, don't go back too far. At most, within a month, 3, 4 weeks, you've got enough to work with. And journaling them as if you would have taken them perfectly are all keys to becoming a consistently profitable AVZ trader, because these strategies are 75% probability of success. They do work, but you've got to learn to recognize them quickly. And you do that by putting the work in. There's no way around the work. So I use PowerPoint. I've used Excel. Beautiful, can do all sorts of things on it, but it's pretty useless for the way that I trade. It does not train my eyes, does not reprogram my mind, doesn't help me to see things in real markets. If I want to see percentages and win ratios and stuff, just draw the report directly from MT4. Pretty easy to do that, and there it is in even greater detail than anything else. So use PowerPoint to journal trades and to optimize the Q&A process. Guys, when you send me questions, specific questions on a chart, screenshot it, put it on PowerPoint, and say, hey, Dr. George, I took the trade here. This was London Open. And I put my stop here, and what do you think? Then I can make a comment on it, right? So I took a trade here, and this was strategy one, whatever, and I can make a comment on it. Entry, stop. Put your notes in. This is what my charts look like. This is exactly, if you were to look at my journal, which is made up of thousands of charts, of course, because I've been trading forever. Ah, goodness me. But they look exactly like this. I can just do a quick search and look for measured move trading range breakout, high of today to low of yesterday. I'll find several examples I can do a quick search of breakout beneath low of yesterday, and I will find many examples. Okay, that's why I write them this way: measured move of bear, breakout below low of yesterday. So I can just go to PowerPoint and say, pull out for me slides, bear breakout below LOID, low of yesterday, and I get 4, 5, 6, 7, 20, 30 slides. Just flick through them and say, oh, okay, this is what the market does when it breaks out. You just become good and better and better and better and better at what you do. So using this is the example of a trading journal. That's the point here. And I'm going to draw something else about the languaging that we use. It's important for us to use the right language. I mean, if you look at this, GBP USD cable, okay, opened value of indecision. That there is a midpoint of the range of yesterday. Multiple revaluations. And that's all you got to note. Multiple revaluations. That's what you talk about, right, in the course. Multiple revaluations. Bears defend and bulls fail to break out. Bulls want to break out above the value of indecision and go into the skies. Bears want, of course, to defend this so that they can break beneath the low of yesterday and decelerate all the way to zero. They want the cable to be worth nothing. That's what the bears want. Well, the bulls wanted to accelerate and become the most valuable currency in the world. That's the reality of it, right? That's the reality of it. So multiple revaluations. That's all we're looking for, guys. That's simple. Just draw a short, brief horizontal line. Boom, boom, boom. Oh, okay, that's what's taking place. Oh, I had two consecutive bear candles here. Only side that a consecutive trend candles in all of this was bears. So some signals that bears are pretty strong right from there. But let's wait and see. London Open, they did nothing. I'm always looking to see what happens with the country index when it's country specific exchange opens. Nothing dramatic took place there. This was US Open, a little bit of drama from the bears, but still nothing. And then we had two consecutive bear trend candles. And I'm thinking to myself, hang on a second. If the bears are strong, what do they want to do? They want to crack beneath the low of yesterday, the Lloyd. They want to get beneath the Lloyd. Bear trend candle beneath the Lloyd. Guys, am I going to sell that? No, 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 no. Why am I not going to sell that? Because this is a currency and this is not the open office country specific index. That is not our strategy. We trade on currencies. You're going to have to wait for strategy number 2. Okay, there it is. Wait for strategy number 2. Bear breakout below trading range and bear breakout beneath this trading range, a bear breakout below the low of yesterday. As the market is doing that, I'm saying to myself, hang on a second, because the high of yesterday, high of today, Lloyd low of yesterday, there is a measured move, trading range, breakout, high of today to low of yesterday. The bears want to get here. That is their primary objective, their first immediate objective, but they even have a bigger target to go for. If you look at this is the measured move trading range breakout range of yesterday. From the high of yesterday way up there to the low of yesterday, that is the measured move. So the bears want to get there. That is one of their profit targets. I got 4 profit targets here. That is one of their profit targets that they want to get to. Now there's this line here, getting to the end of this particular month. I just do a quick to the left. Oh, there is a low of month. It's within the vicinity. This is a primary target, right? What's taking place. But they can also see, everyone can see the low of the month as well as that. Now, that just makes that an even more attractive target for the bears. So they've got that target. They've got the low of the month. And then they've got target number 3, which consists of this measured move trading range. I have today a low of yesterday that I spoke about. But as soon as we have that bear breakout, you see that bear breakout and the follow through, and then we start to go back to revalue at the EMA, the bears say, hang on a second, we have a breakout beneath the low of yesterday. There is the measured move of bear breakout below low of yesterday. So I just call this just one target. So that's number 3, right next to each other. You want to say 3.1 and 3.2. Okay, so there's targets for the bears. Then after the breakout, I'm waiting to trade strategy number two. There is the first revaluation at the EMA, guys. That is it. There is a revaluation at the EMA. Pretty straightforward. We try to, the bears, I mean, the bulls want to see if the bears are committed at the average price. We use the 10 EMA, as Dr. Joseph said, to determine the strength of the trend. That's what we use it for. There's no other scientific reason behind it. That's it. 10 EMA, guys. I told you about it because I found it accidentally. So let's use it, right? 10 EMA is an indicator of strength. Bang, first revaluation. And I'm saying, oh, fantastic. Because the bears now have a breakout trend candle. I want to sell beneath it. There's a technical level beneath here. I'm going to sell beneath that. Nothing happens. The bulls come back. And I'm not, am I dismayed? I'm not, because I know at the average price, we can get one revaluation, two revaluation, three revaluations, or we can get multiple revaluations if you look at our notes. In fact, I'm going to do a video, probably the next video, just to correct the languaging around strategy number two. It's about revaluations at the EMA. That's simple. That's all you got to see. That's a revaluation. That's the second revaluation. There is a breakout trend candle, guys. We sell. We got to see. We're not trading this thing here. We're waiting to see the breakout trend candle. There it is. That's where you're going to get in. We have a tight trading range here. There is the measured move of the tight trading range. So the bears can see that. Now, bears that want to take quick profits are just going to take quick profits there. But we can see the big magnets, the big profit targets down here. Now, here is something else that is beautiful that gives us the fourth profit target. Bear breakout from just before the US Open. We come back to revalue at the EMA. Leg one, pull back to the revaluation, and then leg two. That's leg two. Leg one equals leg two. Leg one is a bear breakout from the US Open, and that is leg two. That is the other target for the bear. So four beautiful profit targets down here. So you've got to you've got to take that trade by all means. You have to take that trade by all means. Okay, that trade that you can take. I probably would have gotten here a little bit quicker, but no problem. If you don't take that, you can take that as well. That's the breakout. Like I tried to get in here, didn't get triggered. That one you can take. That's more distinct, higher probability. Take that. But higher probability means the profit is still at the same level. There is the measured move stop of this up here above the technical level. So just above this candle, above the high of low of yesterday, above that candle. So take that trade. That is a trade that you must take. And then guess what happens? The market, well, as soon as we triggered in, what do we do, guys? Remove half the risk, right? So you cannot lose more than half the risk. Well, you can lose if it suddenly turns. That can happen, okay? But more often than not, once you are in the trade, once you are triggered into the trade, before the candle closes, because we're expecting 75% probably for it to go down, before it even closes, you move your stop to a technical level, take half the risk off. So that you only got half the risk. Then you wait to see if you get to targets. And beautiful, 4 profit targets. Market gets there, and that's the end of my day. Gotta go home because that's like midnight now, my time. Gotta go home. But we hit the profit targets nicely. Bear breakout below tight trading range has 1 times risk reward to 4 profit targets. So that breakout beneath the tight trading range has 1 times risk reward to 4 profit targets. Now, you can take that trade. You can enter anywhere within this trade, this candle, guys. Okay, it's one of the questions guys have been asking me. When do I enter? Well, you've seen the setup. You can see it moving. You've got to enter within here. I mean, that's 15 whole minutes. Should be entering pretty quick. It depends what it does. It might go bang, bang, bang. But that's where you're going to get in. Worst case, if you miss that and you want higher probability, that is a trade that everyone has got to take. Okay, if you don't take that and you get a big candle down here, well, you're right next to your profit target. Just have to say, okay, wait, see it for next day. Now, the point of this, besides the structure of the trades, is how I do my journaling, guys. This is the journaling that I do, very pristine. And what happens is what is interesting. When I go back, like I was doing yesterday, I see more things. And I say, oh, okay, look at that, look at that, look at that. So I can add more notes as I go along. So they can become quite busy. Now, for you guys, you don't have to have all of this. When you send me your cues for my A's, you've got to, of course, have the law of yesterday. You've got to have the valley, the asset, the AVZ of indecision. Right. And you can make a note, Dr. George, I am taking the trade, breaking out beneath the lower asset valuation zone. And I took it here. Then I can ask you why you did that, because that's a currency, and we engage like that. So you might have just maybe 2 or 3 notes. You might have some of the measured moves, you might have missed some of them, and or make commented on them. What I do with some of the traders, when I look at their charts now, when I put measured move, when I just go and look at the actual MT4 chart, I screenshot it, do the work for the guys, and send it back to them. So I love to do that. So let's get busy. Name is Dr. George, if you didn't know who was speaking. And I will catch up with you in the next broadcast. Take care, guys. We shall see you soon. Bye-bye.